The US housing market is a tale of two cities as 2024 draws to a close. On one hand, we see reports of rising prices fueled by a shortage of homes for sale. This paints a picture of a strong seller's market. Yet there's another narrative unfolding. Some data points to a cooling market. Prices are starting to stabilize and homes are staying on the market a bit longer. This suggests a shift towards a more balanced market, even hinting at a potential buyer's market on the horizon. So which is it? Is the US a haven for sellers or an emerging opportunity for buyers? The answer, as with most things in real estate, is nuanced. Several factors are at play, creating a complex and dynamic market that requires careful consideration. Let's start by untangling the web of conflicting price data. Different sources provide varying median home price figures across the United States, creating confusion for both buyers and sellers. For instance, Realtor.com reports a slight year-over-year dip in median listing prices in November 2024, while Bankrate.com indicates a double-digit increase. How can this be? The devil is in the details. Firstly, the time frame considered can significantly impact the numbers. A month-over-month comparison might reveal different trends than a year-over-year analysis. Secondly, the metric used, listing price versus sold price, can also paint contrasting pictures. Listing prices reflect sellers' aspirations, while sold prices represent the actual market value agreed upon by buyers and sellers. Understanding these nuances is crucial for making sense of the market. Don't be swayed by isolated data points. Look for consistent trends across multiple sources and timeframes to get a clearer picture. Inventory levels are a key driver of housing market dynamics. Low inventory generally favors sellers as limited supply fuels competition among buyers, pushing prices upward. Conversely, increased inventory can tip the scales in favor of buyers, providing them with more options and potentially cooling price growth. Across the United States, inventory levels have been a subject of much debate. Some sources highlight low inventory as a driving force behind a seller's market. Others, like Bankrate.com, acknowledge increased inventory compared to the previous year, while still classifying it as a seller's market. This discrepancy underscores the importance of understanding the local market context. While inventory levels might be considered low in absolute terms, they could still represent an increase compared to the recent past, signaling a potential shift in market dynamics. Mortgage rates play a pivotal role in housing affordability. As rates rise, borrowing becomes more expensive, potentially impacting buyers' purchasing power and cooling demand. Many markets across the country have felt the pinch of rising mortgage rates. Bankrate.com reports mortgage rates hovering around 7.1%, a significant jump from the historic lows experienced in recent years. This increase in borrowing costs has undoubtedly influenced affordability, making it more challenging for some buyers to enter the market. The impact of rising rates is particularly pronounced for first-time home buyers, who are often more sensitive to changes in affordability. It's crucial for buyers to factor in these higher borrowing costs when assessing their budgets and determining how much house they can realistically afford. The number of days a property stays on the market before being sold can provide valuable insights into market dynamics. Shorter times on market typically indicate a strong seller's market with high demand and quick sales. Conversely, longer times on market suggest a more balanced or even a buyer's market as properties take longer to sell. Across the United States, we've seen days on market increase slightly year over year, according to Realtor.com. While this doesn't necessarily signal a dramatic shift towards a buyer's market, it does suggest a potential softening of the market. It's important to note that days on market can vary significantly depending on factors such as property type, location, condition, and pricing strategy. A well-priced, move-in ready home in a desirable neighborhood is likely to sell faster than a fixer-upper in a less sought-after area. Predicting the future of any housing market is a complex endeavor, and the US housing market is no exception. Different sources offer varying forecasts, ranging from continued price growth to the potential for decline. Some experts, citing strong economic fundamentals, population growth, and desirable quality of life in various regions, remain optimistic about continued price appreciation. albeit at a potentially slower pace than in recent years. Others, however, point to rising mortgage rates, affordability challenges, and the possibility of an economic slowdown as factors that could put downward pressure on prices. The truth is, no one can predict the future with absolute certainty. The housing market is influenced by a multitude of factors, both local and national, that can interact in complex ways. It's essential to stay informed about market trends, economic indicators, and expert analysis, but it's equally important to recognize that predictions are just that. Predictions, not guarantees. Navigating the housing market in these uncertain times requires careful planning, realistic expectations, and a trusted real estate professional by your side. For buyers, get pre-approved for a mortgage. Knowing how much you can borrow upfront will give you a clear budget and strengthen your position when making offers. Be prepared to move quickly. In a competitive market, desirable properties can sell fast. Be ready to make a decisive offer when you find the right home. Don't be afraid to negotiate. While it's still a seller's market in many areas, there may be room for negotiation, especially if a property has been on the market for a while. For sellers, price your home strategically. Overpricing can lead to your home sitting on the market for extended periods, potentially hurting its appeal. Work with your agent to determine a competitive price based on recent comparable sales. Highlight your home's best features. First impressions matter. Stage your home effectively, highlighting its strengths and minimizing any weaknesses. Be prepared to negotiate. Even in a seller's market, be prepared to negotiate with potential buyers. Flexibility and a willingness to compromise can help you close the deal. Navigating the housing market in 2024 and beyond requires a nuanced understanding of the interplay between conflicting trends. By staying informed, seeking expert advice, and approaching the process with realistic expectations, buyers and sellers can position themselves for success in this ever-evolving market.